Welcome everyone. Thank you for tuning in to our property webinar. We're really excited to be able to catch up with you guys and talk a bit about how the market's performing and a little bit about what's happening right now in Australia and particularly in Sunshine Coast. From our brief, right now we're trying to really explore what the mainstream media is saying about property markets and trying to get away a bit from the dramatic and sensationalized headlines that occur and what the real story is. So right now, particularly in the Sunshine Coast, the actual stories are very different from what you might believe from just reading the headlines on Facebook or on news.com. So we want to really look into the impact of the reduced sales activity. We want to look at where the best rental areas are at the moment and how the rental market is looking. We're also going to have some commentary on the $40,000 government grants that are available, what they mean, what they involved, and where things are positioned at the moment. And then looking forward, what the future holds for property on the Sunshine Coast and what we can expect to see going forward. So that's a little bit from us. Of course, I'm joined here by Scott, and we're on the ground every day looking at property and exploring what is best for our clients when they're looking for places to live, places to rent, and things that will make best sense for them going forward as their investments and hopefully achieving their financial freedom. So let's jump into it, and we're going to start talking about the impact of the reduced sales activity.
Yeah, thanks, Doug. I think just a comment you made before can show the difference in our ages. You're talking about all the headlines that are on Facebook or news.com.
That's very true.
I would have said the newspapers and the television news.
Twitter.
So it has been a quite interesting period. Obviously, with COVID, there's all sorts of things going on that everyone's sort of kind of not really aware of what the truth is out there. And this is the type of stuff that the news bulletins love. It's the great headlines that come out there. There's a couple on the side here on our slide, but things like rents in free fall, property prices dropping up to 40%. There's one from CBA, I think it was 32%. Big headlines there, but when you actually get into the guts of the news article or the presentation, there's nothing like that. There is a little bit of truth to some of that, and it's particularly in areas like inner city Sydney, inner city Melbourne, inner city Brisbane to a little degree. Mostly in the unit markets there. They're in a world of trouble. And this is one of the reasons why we try to avoid units. They're a different breed unto themselves, and the different types of units that can pop up, and the number of them and the comparability of them can really make a difference in what's happening in that market. But if you take some of those aside, the markets aren't actually that bad. Right now we've had quarter on quarter, Sydney's been down about 2.3% and Melbourne over the same period 3.2%. And that's not good. It is a negative trend. But the year on year so far, they're still positive. Sydney's still up 6.6% and Melbourne up 9.3%. So they're still looking okay. Like it's not all doom and gloom. Having said that, if they continue to have the quarterly downfalls, those numbers will come down. So that the outlook for them is still a little bit unknown. But these markets traditionally, they're bigger markets and they have bigger booms and bigger busts than we're used to up in Queensland here. We have it generally a little bit more of a flatter line in Queensland here, particularly in the Sunshine Coast. It seems to be a lot more stable. Brisbane has been down 0.9% over the last quarter, but it's still up 3.8% over the year. So whilst it's not up as high as the other markets, it's still kind of a lot more stable. Sunshine Coast has been even better than that because it's been up 3% over the last quarter and it's sitting at 4.1% over the last year. So we sort of want to look into that and what's happening behind all this. A lot of what's been causing this has been the impact of reduced sales activity. So what that means is that there's been less stock for sale, so less houses for sale. a lot of people have held off, particularly in the first sort of 2 or 3 months of coronavirus happening. They've just held off and gone, well, let's just wait and see what happens. But on the flip side of that, the actual sales that have gone through have been really healthy. They've had good, stable numbers, or even started to grow quite well. And it's actually created a little bit of a position, particularly here in Queensland and even more so on the Sunshine Coast, where it's created a whole lot of demand now for it because there just isn't enough stock. I mean, we're out chatting to real estate agents, developers, builders. They just can't get enough stock at the moment. They need more houses to sell, and the market's going crazy. I think there's a number of reasons for that. People not being able to travel meant they've actually been looking in their own sort of backyard a little bit more. They're keener to do renovations or look to do that investment property or move house and upgrade. There's actually a lot going on here. There's also a fair bit of interstate activity happening, and because people in Melbourne and Sydney are keen to come up north here and get whether they consider it a safer market potentially, or maybe they think, look, now's the time, we've always been planning to do it, let's go and do it. And a lot of the agents are just getting sales where it's sight unseen, and because they can't obviously come and see the property, all they can do is look at some photos on realestate.com and take the leap. So it's been a really good, strong market, despite what the initial headlines have been telling us.
I think the other point on that really quick is, people haven't been forced to sell their properties either, because of the JobKeeper and government grants and the bank leniency with delaying mortgage repayments. There's been less of those urgent sales where people have been forced to kind of put their house on the market. And then also initially with the COVID restrictions, when open inspections were not allowed, so there was definitely that hit to the market. But it hasn't been, it's actually been probably quite good. There's been less stock on the market. It's kind of stabilized things now.
Yeah, it's a really good point. Whether or not, with the second wave, if that creates more issues down the track with people having to sell, and whether JobKeeper can continue and all those sort of issues that go with it, that may create separate issues down the track. But really, on the coast here, it's been pretty good news. It is worth reiterating, though, that it's the right areas and the right types of product that have done well. The poorer areas, or the different types of product, and by product I mean units versus houses, commercial versus residential, those sort of things. Some have done really badly and they've been affected really badly, but the good stuff and the good areas has just done really well. And that's why we get involved with our customers, make sure that they're going to go and buy a house anyway, they're going to go and look on realestate.com, they're going to go to any bank, but let's just make sure we try and put them into the best possible finance situation and the best possible product or property that they can get into. So when things like this do come up, they're in the best possible position. Just to mention some of the really good areas that we've had on the Sunshine Coast that have been holding up really well. Boccarina's been going wonderfully well. Medina, Orana, so all that sort of stretch of the coast there, that's been going excellent. Perigian's been going pretty good. That's been very stable, growing quite nicely. Noosa, Taunton area has been going gangbusters. Some of the railway towns like Woombye, Palmwoods, they've been going pretty good. Even Nambour's actually been going kind of well over the last. The stats on there are looking pretty good too. So I think it's just it's worth looking at that, getting it right, and making the right decisions on that. So that's the property market. We'll now pass over to Doug to get onto the rental market.
Definitely. Awesome. Thanks for that, Scott. So the rental situation has been really interesting, particularly on the Sunshine Coast, where things are looking nice and tight. Just to start us off with, the best way to really figure out what's going on in a rental market is by looking at the vacancy rates. And we may have talked to you guys a little bit about this before. Our last webinar, we talked a bit about vacancy rates, but just as a refresher, vacancy rate is the percentage of available properties. So all available rental properties that are vacant or unoccupied. So you've got all the rental properties, and then whatever piece of that pie is unoccupied at the moment, that's the vacancy rate of that. So we're looking at 2 to 3% being a healthy rate statistically across Australia. That's where the market is, well supplied, and there's enough for the demand, but not too much supply where there's not enough demand to meet up with it. So that's where we're looking at there. Right now in the Sydney CBD, we're looking at a vacancy rate of 13.2%. So it's absolutely crazy. There is way too much stock available for the current demand. And that's down from 16.2% at its highest point in May of this year. So it was higher, it's come down low, but it's still really, really high. And the problem with that is because Sydney CBD has been very reliant upon international migration as a source to kind of feed the supply of units, especially in the city centre. Now with international travel restricted, it's basically non-existent at the moment. There's no one kind of filling those units, and there's lots and lots available for rent, and probably still that are under construction and will come to the market and be available too. So it's not really good at all.
It is worth pointing out that that's a great headline grabber, that 13.2%, and it is by far the worst out of the lot.
That's right, and it is focused solely on the CBD area. So if you looked at Sydney as a whole, it's not looking like that at all.
Take apartments out.
That's
a
right.
Different story.
That's right. And that's the thing with all the statistics is, and with the problem with some of the news headlines is they do cherry pick the thing that's going to make it look as dramatic as possible. So unfortunately, you do need to do your own research and read in and see what exactly are they talking about and where did that headline come from. And who better to talk to than your favorite property experts? No, that's fine. So that's what Sydney CBD is looking at, just as a comparison. Now, Sunshine Coast, on the other hand, our backyard is sitting under 1%. Currently, it's sitting at 0.7%. And it's unreal. It's one of the lowest vacancy rates we've had on the coast for a very, very long time. And the coast has been pretty good. It's been a pretty stable market, been sitting at that 1 to 2% for quite a long time now.
It's been great.
But we've definitely dropped below, which is really, really good for investors looking to have their properties being rented out. So what does it mean? It means that at the moment, property managers, they're crying out for more stock. They want more work to do, which is great. They've got people coming to them saying, I need a place to live, kind of, I'll take whatever you got. They're having to pre-apply. So a lot of the time they're coming to the inspection with a pre-signed paperwork to get into the property, and there's queues of people being able to get into the property. So as a property owner, if you've got an investment property, what that means is, one, either less time between tenants. So if your tenant leaves and you get a new tenant, there's probably less time with that changeover. It also means that you're probably going to be able to charge a bit more rent than what you'd normally be able to do because there's competition. So you can put your prices a bit up and you'll probably still get that taken up. So it's quite a good story right now for investors with properties to rent. And again, this is why we get involved, because again, across the Sunshine Coast, there's the pockets that really, really attract tenants. Right now, what we're finding is areas like Boccarina and Batinia, quite good. Like you can see on the graph I got there, Maroochydore, Peregian Springs and Boccarina. That graph there is showing you the growth rate for rent prices over the last 3 years. And so they're doing pretty well, those three. And, we've got a few other pockets that we'd like to work in with those. Those are three notable ones we thought we'd share with you today, that once a house kind of goes in for rent there, it's getting snapped up quite quickly. So it's just going to show you what's happening there. So a bit deeper, Boccarina and Batinia, we've had a 1.5% increase in weekly rents over the last quarter, 0.7 over the last 12 months, and 5.8 over the last 3 years. Maroochydore has a 10% increase over the last quarter, 6.9% over 12 months, and 13.4% over 3 years. And Peregian Springs, we've got 6.8% increase over the last quarter, 8.8% increase over the 12-month period, and 14.1% over the last 3 years. So all very good story here on the Sunshine Coast when it comes to the rental market. Yeah,
and even with that, digging a little deeper, like the Boccarina Batinia number there is a bit lower. It's an area where you've got a mixture of a lot of older houses and a lot of new houses. And particularly with Boccarina, it's a lot of new stock coming online all the time. So that tends to lower it down initially, but you'll see that build up. Whereas places like Maroochydore and Peregian, as they've sort of filled up and they've have less new stock coming onto the market, then that starts to push up the rental increase as well. And it's probably no surprise there that the good rental areas are the same as the good sales areas. You know, it is cherry picking the right areas and the right type of property in those areas that make the difference.
All right. So next up is going to talk about the government grants. So let's jump into that.
Yeah, this is something we did a webinar on this when it was first announced several months ago now.
Yeah.
And what's happened was the federal government have announced it and said, yay, we're going to put out this $25,000 home builder boost, and we'll pass it on to the state governments to actually work out how to make it all come together. And in typical fashion, Queensland's been one of the last ones to actually come out with how it's going to work. On top of that, we're also been waiting for the banks to work out how they're going to make it work, because there's certain things they've done with the first homeowners grant. Well, some banks have done and some haven't, that have made it very easy to use for your deposit or not. So now that we've got a little bit more clarity around that, it's worth going through again. So there's two grants around at the moment. One is this home builder boost of $25,000. So if you are building a new house or a substantial renovation, you can get access to this. This is not about being a first homeowner. This is just building. It's trying to encourage the construction industry, directly related to COVID. It's from the 1st of June, I think it was, to end of December. So you can backdate it to if you've got into a contract for the 1st of June. There is an application process, and it's a little bit onerous, but it's worth going through. Effectively, the Queensland government will pay that from when the slab or the base stage payment has been paid. So you'll get it back. So far, from what we've heard from the banks, none of them are taking it as part of the deposit. They're actually you've got to fund that 25 yourself, and you'll get it back from the government later. So the banks haven't really come to the party on that one. The second one that is still around is the 15 grand first homeowners grant. This has been around for a while now. It has reduced slightly to 15 grand, but it is still around. Obviously, with this one, you have to be a first homeowner. This one, some of the banks will take it as part of your deposit. So that can really help out there for first homeowners. So in total, there's $40,000 in after-tax dollars that's available for a first homeowner. So in a lot of cases, you'd be crazy not to jump at this if you can. There's still plenty of really good areas where you can build. And as the numbers we've just shown before for the rentals and the sales, there's no reason not to. To put that 40 grand into perspective, for a first, typical first homeowner of ours is probably in that, marginal tax rate of about 32.5%. So working that backwards, they need about 59 to 60 grand of income to put aside just to save that $40,000. So assuming most people, and from our client base, we can tell this, that you could probably save 20 grand a year. And that'll be pretty good from what we've seen with a lot of customers in that tax bracket. So let's assume it's going to take you 2 years to save 40 grand. So it's worth getting into if you can. What we want to also then compare is, well, what do I do if I jump into a property now and take advantage of this versus doing nothing and just saving that 40 grand and doing something later on? So if we look at sort of a $700,000 property, and properties are starting to get to this price as an average pretty quickly for the decent stuff, and assume a 5% growth rate. That means that $700,000 property, as it grows in 5%, in 1 year's time will be worth $735,000. That compounds up again another 5% at $771,000 in 2 years' time. So looking at what does that mean? So what's the difference between acting now or waiting? So option one we've got here is, can we use all the grants that we can get as a first homeowner? So our 40 grand total grants. We can put that straight, and that becomes equity. That's cash we haven't had to save, we haven't had to earn, we haven't had to do anything for except apply for it, and we can put it into this property. So that's equity in that property straight away. If we buy that $700,000 property now, in 2 years' time, we'll have another 77 grand of equity in the property, assuming it grows at 5%. And if we had the ability to save 20 grand a year, over those 2 years, we would have saved another 40 grand anyway. Because right now with these interest rates, it's typically, as we found, it's actually cheaper to own than it is to rent the same property. So there's never been a better time to buy. So in this case, over the 2 year period, you could have 157,000 in equity in that property and savings. Option two is you do nothing. You say, well, I'll just wait and save up my 40 grand and then I'll purchase. Well, you won't have any grants, obviously. You've got no growth in the property and you've got your 40 grand savings. So the difference between that 157 and 40 is 117 grand better off you'd be. And it actually gets worse than that because that $700,000 property is now not 700,000 anymore. It's actually 770,000. So you're just paying more for the same thing you would have bought 2 years ago. Or it could be even worse than that. Can you actually afford 770,000 now, or do you have to go out another suburb to make it work? So the difference between using what's available now if you can and not can actually make a big, big difference just over a couple of years here that we're looking at. It really is worth looking into and trying to get it right if you can.
I suppose it's a lot of it, can be kind of chasing your tail a little bit. I'll buy later, that's fine. I'll save in the meantime, and then the property prices get increased, and I'll save up a bit more because I need a bit more now. And then it's so worth it when these type of grants are available. 40,000 tax free. It's really not to be just scoffed at. It's something that can really make a big difference for you. So get in while you can. Next one we're going to look at is looking forward. So this has kind of been the central theme of our webinar today is what can we look forward to over the next year and next 5-10 years kind of thing. And particularly for the Sunshine Coast, we're in a really good position at the moment. So there's a few different things I want to chat to you guys about today. So the first one is the change in travel and work options for people. So the restrictions on travel has meant that people aren't able to take these international holidays. They're not able to even travel in the States. So people, like Scott said, are looking in their own backyard going, well, I've always wanted to live by the beach, or I've always wanted to get that nice green change up in the hinterland. So people are interstate and making the move domestically to get the house that they want. And also they're finding that they're not necessarily needing to have to be in the office to be able to perform their work. I think it's been a really big eye-opener about what can actually be achieved being at home on your computer with the internet at home, than having to come into the office. So we definitely feel this trend, or this new normal, where people are going to be able to prioritize lifestyle factors over location for just work. So potentially moving away from your capital cities like Melbourne, Sydney, even Brisbane, and going, well, where do I want to live? Because I can do this work wherever I am. So absolutely, there's definitely that sort of momentum in that as well. In the Sunshine Coast, we've also got a lot of new infrastructure going on at the moment. To name a few, the city centre, Maroochydore City Centre, a very exciting place there. So that is being fed by the new undersea internet cable, which is going to provide the Sunshine Coast with the fastest internet to Asia, the fastest connection to Asia, and the second fastest connection to the United States outside of Sydney. So you could imagine being, a big business currently based in Sydney, or looking to base your business somewhere and going, well, I can either pay Sydney prices or I can pay Sunshine Coast prices. And I think I know what I'd rather do out of those two options there. The city centre is really cool. There's so much I could kind of talk about on that side. A lot of good, cool technology going in there. And that will really evolve over the next 5 to 10 years. We've got major infrastructure like our roads. You can probably see if you're passing through Palmview at the moment, past Aussie World, there's a lot of activity happening on the roads there. And again, that all just helps to grow our region and to get it easier to get around and provide link roads there. So it's good to see those coming along. Our hospitals have continued to expand. So Nambour is expanding their services, and the Sunshine Coast is still filling out. So we've still got more room there. And we've got a new runway now, unfortunately not being very well used. It's a little bit bad timing, but it will be something that will be a big impact to the economy here, being able to do more exports and more domestic travel. and the likes of that. So there's some really cool things happening with that. And what does that mean to you as a property investor or a property owner? Well, it means that the Sunshine Coast should be able to experience some more capital growth because our region is building. More people are moving here, ergo more demand, and less supply means hopefully those prices are ticking away nicely. The good thing about the Sunshine Coast, it has been a very steady market. We're not seeing big ups and downs like we do with other markets. We're quite nicely kind of chipping away and going there. And that's kind of what you want. That's reducing the risk for your portfolio as best as we can. Limited available houses and land. So right now with the grants, there's not really a whole lot of land available because everyone's snapping it up, making the most of the 40,000 potentially they can use. So it is really hard finding blocks of land. They still exist and we definitely can help you out with that, but it's definitely not as much as it typically would be, particularly this time of year. And even established houses, we're finding that there's not a whole lot on the market, like we said before, with the reduction in sales activity. So what is there is being sold. So there's not really much to go around.
Yeah, so you've got to jump on it when you want to do it. You've got to jump on it now.
Absolutely. With the coastal strip, so again, people prioritizing that lifestyle factor, going, all right, I want to be by the beach. And so definitely the property in areas that are by the ocean are definitely being looked at more thoroughly by people, and the sales are occurring a lot in those kind of spots there.
Yeah, absolutely. All the bigger developments are a little bit further away from the coastal strips now. And the coastal strips are in the main, like the Block Arena really being one of the last ones here. They're just going to be more and more in demand in the future.
That's right. Another good thing that we're seeing at the moment is that the Sunshine Coast economy is moving away from being solely reliant on a tourism economy, and we're starting to diversify with different things as well. So particularly with the city centre, that'll be a big kind of game changer, as the Sunshine Coast Council kind of put it, where you have these bigger businesses coming into the CBD. So definitely diversifying the economy here just means it's a little bit more reliable. We're not just waiting for people coming in to spend their money from holidays. And lastly, with all the government grants, we've talked a lot about that, but right now as well, low interest rates, the lowest, we've seen it for a long time, and probably will stay low for a little while. Don't have a crystal ball, but at the moment, that's kind of what we're getting the vibe for. It's a good time, and like Scott mentioned, when you're looking to own a home, or if you're currently renting, the rate to own your own home interest rate is really competitive. So it might mean that you're actually paying either less or about the same for owning your property than just renting it out.
Yeah, and it's worth mentioning too on the interest rates at the moment, because there's a lot of chatter about that on the news as well. There are some super low rates out there, but you also make sure you chat to us first about it, because sometimes the low rates or the gimmicks out there don't actually suit, and they may end up costing you in the long run. Whilst we all want to make sure we've got a decent rate, in general, they're all very, very competitive right now. But it's also the other features of the products that can help you and set you up to do that next thing, or get that next investment property, or upgrade your home, or whatever, or invest in a business, whatever it might be that you're into. If you get into the wrong type of loan, because you've gone in on this, what looks like to be a great rate, it can actually hamstring you down the track. So be wary about that, and come and chat to us about it before you sign up for anything.
And it's really like the central message that we provide is it's worth getting advice, it's worth doing your research, doing the numbers, and then you can be confident going forward in whatever decision you make that it's going to work out for you. So definitely let us assist you with that, and come to us with any questions. And look, that is our content for today. So we'd love to chat a little bit more about this with you guys. So come talk to us. We've got our emails, we've got our phone, we've got text. Make an appointment. We would love to talk a bit further about what this means for you right now, and where we could take a property investment or a home for you. So if there's any questions at the moment, guys, put it into the chat. We can answer questions now. I'll give you a few moments for you to type away into the chat box. Otherwise, yeah,
reach out.
We'll be in touch soon.
Right, doesn't look like any questions at the moment.
I think we've done a good job.
Must have answered them all. Yeah, so otherwise, please reach out if you'd like to. Let's have a great day.
See you guys.
Thank you all.